Hey everyone, today is Thursday, May 21st, 2020. The market has closed. Right now it's 9:20 p.m. Eastern Time. And let's just go over the market briefly. Not much happened today. Again, the market just pretty much flat. And it hasn't done really much. And again, I am expecting the market to go down, then heading to the 3100. That thesis has not changed based on the current market action. And this kind of flat action, just avoid it. That's my advice to you. Just avoid it. Just don't do it. Don't play it. Forget about it. If you have a long position, if you have a long-term long position, hold on to it. If you have option position, do not leave your option here because this thing could just go horizontal and your option position could just go down, right? Because of the theta, the decay. And so you probably and I wouldn't short it here either, right? Again, in my previous video I talked about there is a possibility for this just to continue to go up. It consolidates through time, it consolidates horizontally, then we continue to go up to the 3100 level. And so I wouldn't play on the short side for sure. And the people who play on the short side on on Tuesday, we had a brief kind of a correction here, and immediately after the hour, the market just went back up. So there was no short opportunities for the bears at the moment, and I don't see any long opportunity for the bull at the moment because right now the entry point is just not ideal. So nothing we can do here. Basically, just sit on the sideline and keeping your money in your pocket and don't do anything. You do not have you don't have to trade every day. Again, this is what I've been saying. You don't have to trade every day. The difference between us and these hedge funds are these mutual funds, they have to trade. They have to buy stuff at the end of the month or at the beginning of the month because they're getting, especially for mutual fund, they get bi-weekly or weekly infusion of cash from the mutual fund subscribers, right? So because a lot of people they have their the plans, retirement plans and stuff, so they do monthly or bi-weekly contribution to these mutual funds, and these mutual funds have to buy. They can't keep a large portion of their fund in cash, so they have to buy the market regardless what the market is. So they're passive, right? For us, we don't have to. You're a trader. You can actually wait it out and wait for the market to give you opportunity to enter the market. So you don't need to do this. You don't need to do anything right now. Just like here, just like back in January, February, you don't need to do anything, and you see the market just fell apart. If you didn't do anything in January, February, then just by doing nothing, you came on top, right? Basically. So let's take a look at this S&P 500, this S&P E-mini 500. So now let's take a look at Nasdaq. Nasdaq is again the strongest sector in the current market. We're very closing in to all-time high. We actually filled this gap here, so we are. I think we are going to get to all-time high. The chance out is just extremely high right now, but if you're buying here, you're just being stupid. You're just being, I don't know, like you want to throw your money away, right? The risk and reward for anyone who's buying here for the long term is just really horrible. It's just terrible. It's a terrible place to buy right now. If you're buying today, you better be buying only for the next couple of days. You're doing short-term trading. You're buying for the long term, something wrong with you. Okay? There's something wrong with you. You're probably going to tell me, hey, I can buy, the market will eventually recover. I can buy for the long term and not have to worry about it. Well, that's not true. That's not true because because let's take a look at the Dow Jones Industrial Average. In the 60s. So the market could go on to the sideways for a very, very long time. Let's take a look at the weekly time frame. You can see that we're here right now, but there was a time in the U.S. stock market where the market just went horizontal, right? For almost from 1964, or to be more exactly, 1961 to 1982. So you're talking about 20 years of doing nothing. So the U.S. market had a 20 years of lost 2 decades, which no one really talks about that today, right? A lot of people forgot about that. The U.S. market was flat for 20 years. And also take a look at this, 1929 to 1953. You're talking about a more than 20 years market being flat. So these kind of scenario could potentially happen for the next 20 years if you bought at the wrong point. For example, if you're buying here, you're basically a backholder, right? You're never going to be getting a profit. If you're buying here, you're not going to be getting a profit. But even in this bear market, if you buy here, you will be making profit. If you buy here, you will be making profit. If you buy here, so even the bear market is not scary. What's scary is you buy at the wrong point. It's just going to be holding it back for the next 20 years if you buy at the wrong point. So don't do that. Clearly, if we look at NASDAQ, we are near the all-time high given the current environment. I think the valuation is really insane. The fundamental doesn't really support this move. But we have to trade based on what we see. This market is driven by liquidity. It's driven by liquidity, driven by a huge infusion of liquidities and monetary expansion by from the Federal Reserve. And if you print trillions of dollars, inject that directly into the economy, the market will go up, right? The market is basically made of money. I've talked about in my previous video. So today, this one thing that's really important is the Ethereum. It's a cryptocurrency market in general. So let's look at the Bitcoin at the moment. Let's take a look at Bitcoin. So the Binance, Bitcoin. You can see that the Bitcoin is kind of just in this range right now. It's going horizontal. Does this look like a top to me, like interim top to me? It might be. Bitcoin is actually fairly weak in interim. It's going horizontal, and I think I have been expecting Bitcoin to actually break this level up higher, but not these levels. These levels, there are a lot of selling pressures from these levels. But I still thought that with this kind of move, we probably gonna break higher, make another high, then we camp down again and consolidate somehow before the next major move. And so is the Ethereum. But Ethereum today, the move in Ethereum today got me a little bit nervous. I think this move was due to the weakness in Bitcoin because all these cryptocurrencies are obviously correlated. So when the Bitcoin is weak, Ethereum has to go down as well with Bitcoin because they are correlated. So, but based on the market structure of Ethereum, I always been thinking that this is not a top. I always think that this is just a energy building phase where we are going to go higher and trying to reach this particular level. But I don't think in my previous video, I talked about we're probably not going to be able to break this level. We're probably going to consolidate, making a top formation and came down again. However, I just don't think this part is the interim top. I think we're still going to continue to go up. However, I wasn't expecting this move in particular today. I was expecting that we continue to flatten out, building energy, and then just go straight up. I did not really expect a shakeout today. Whether this is a shakeout or a demonstration of weakness in the market participants is really difficult to tell at the moment. But however, we have not broken even this previous low. So this is actually a higher low here if you look at the price action. So yeah, I think I still maintain my hypothesis